What's up, guys? This is LUCCI here, giving you an introduction to what I do, which is trading options and tape reading. The best way to do that is to go through a trade I made. So we'll take a look at an Apple short that I made on January 15th when the stock got drilled below $500. Okay, so right here we're taking a look at an intraday chart on January 15th of Apple, and as you can see, right off the open, stock got buried pretty quickly. We shorted around 496 and covered 492, 491. And what I wanted to do was show you the difference here between trading equities and trading an option. So just to give you a quick example here, so if we shorted 1,000 shares at 496, it would cost you about $500,000 to do so, about 496,000 to be exact. And if you covered it, let's say 491 for a 5-point gain, you'd make $5,000 on an investment, an initial investment of $496,000. Now, needless to say, not a lot of us have access to that kind of capital or buying power, to be able to make that trade. Okay, so now if you went ahead and calculated your percentage gain on booking 5 points in the equity, you would see that you'd make about 1% off your initial investment of $496,000. All right, but there's a different way to play it, and that's by using options. So right here we're looking at a 490 strike price. This is a put option, and the value of a put option generally goes higher as the value of the underlying stock goes lower. All right, so you could have played this 490 put instead of shorting the actual equity. Your percentage gains would have been amplified considerably. So in order to get the same exposure to 1,000 shares of the stock short, you need to buy 10 contracts of this option. Remember, each contract represents 100 shares of the stock. So 10 contracts here would get you the same exposure to having 1,000 shares short of Apple. Now, the option when this stock was priced at $496 was valued at about $4.50. And once the stock hit $490, you could have sold the option at about $8. The important thing to notice is, in order to buy 10 contracts at $4.50, you're spending only $4,500 to get the same exposure to a position that would have cost you $500,000. So this type of trade is our bread and butter. It's what we shoot for on a daily basis. Now, I've been executing trades like this with these similar strategies for the past 5 years, even when I had an account size of, 5,000. So you definitely don't need a hedge fund behind you to put this stuff to use. So we teach options and tape reading in our classes, and I've been teaching for about 2 years and I've had some very successful students. Now, if you take our class, you get 12 1-hour-and-a-half class sessions spread across a month. And we run them on Monday, Tuesday, and Wednesday, starting at 8 p.m. We record each session in case you miss a class or want to review it. And you also get an 80-page digital course guide that we made specifically for the course, and access to my membership-only chat room for a month so that you can observe these strategies being put to use on a daily basis. More importantly, you get to come back to future classes for free. So if you pay for February's session, you can come back for March at no extra charge. We are always updating our curriculum and teaching how to address current market conditions. So this is a feature of our class everyone likes to take advantage of. So if you want to learn more, make sure to fill out the contact form at the bottom of this page. Thanks for watching.